The Walt Disney Company, ticker symbol DIS, has seen its stock price continually drop since March 2021, which coincidentally was its last all-time high. I have a small amount of shares in Disney and would love to see a turnaround of fortunes. Having bought nearer to the top than the bottom, is now the time to average down and get in at these new lows, or will the downward trend continue? It's recently had a 52-week low of $84.07, which we haven't seen since the start of the pandemic in 2020. We have to go back to 2014 to see that low again. As an investor who has held onto the stock, it has been a rough ride and overall a thoroughly unenjoyable experience, especially after that dividend cut at the beginning of 2020. But according to reports, all is not lost. Disney CEO Bob Iger said the company has asked its board to reinstate the dividend by the end of the calendar year. I can't see it being on a par with the amount that it was before, which was 88 cents. Anything would be good and would definitely help stabilise and increase the stock price. There has not been any confirmation date yet. Earnings need to be much better to get that feel-good factor back. Q3 just happened and while the results were mixed, missing Wall Street's expectation on revenue, forecasts hovering at approximately $22.53 billion. They brought in $22.3 billion. They beat on EPS expectations. Expected was 99 cents, actual was $1.03. Expectations had been lowered numerous times over the last couple of months, so a very bearish outlook. If we have a look at their presentation, they went through recent highlights including Avatar: Way of the Water being the third highest grossing film of all time, and that is also on track to be the biggest ever domestic home video release. That being said, recent box office films haven't set the world alight, and this will help cover the losses of Indiana Jones and the Dial of Destiny. Luckily, they have another 2 Avatar films in the pipeline and continued Marvel and Universe and Star Wars releases to keep the gravy train rolling. Pixar's Elemental recently went past the 400 million mark, a return to form after the lackluster response of Lightyear. Another highlight is that they improved their direct-to-consumer operating income by roughly $1 billion in 3 quarters. They need more of these type of highlights. If we have a look at their subscriptions, how they've done, Disney Plus subscribers, domestically they lost 300,000 in the last quarter, internationally grew by 1.1 million. Hulu subscribers increased by 100,000 since the last quarter, but ESPN Plus subscribers decreased by 100,000. Overall very lackluster, nothing to get excited about. If we have a look at the parks, domestically, although revenues were up, operating income was down by 13% due to higher costs, inflation basically. International results were better, mainly due to the Shanghai resort lifting its COVID restrictions. Consumer products down due to lower merchandise licensing revenue. And then if we have a look at the financials, the market cap is currently $159.87 billion. If we look at how they've done based on previous quarters to where they are now, it is difficult to find the positives. Although revenue was missed, it is still moving in the right direction. All the metrics that the previous quarter were positive on are now down. EBITDA, free cash flow, net income, and EPS. A good sign is debt is coming down little by little. If we look at the last 3 quarters, no share buybacks at the moment. Return on capital employed, Q3 info has not been added to this yet. Also expenses on the rise, not surprising given inflation. The discussion of reinstating the dividend will be put on pause if Q4 doesn't see a dramatic improvement. Let's see what the analysts are forecasting. CNN Business have an average 12-month price target of $110, which is 25.7% upside based on 23 analysts. TipRanks have an average price target of $115, which is 31.44% upside from where we are today based on 21. And Zacks have an average buy price of $117, which is 33.7% upside from where we are today based on 19. An average price target between CNN, TipRanks and Zacks is $114. If we head over to value investing, I've had a look at the intrinsic value based on the discounted cash flow. It has a fair price of $121.05, which is 38.4% upside. And trading multiples is 13.6% upside with a fair price of $99.41. If we take the average of the analyst expectations and value investing models, that would give us $111.48. With a 10% margin of safety, that would give us $100.33. And if you're being a bit more cautious at 20%, $89.18, which is higher than it is now. I think the stock is fairly valued. They have just announced that they are raising prices on their streaming services. From October 12th, the company will raise the monthly price of its ad-free plans. Disney Plus and Hulu by more than 20%. This should help them bring in more revenue but could lose them some subscribers. To counteract this, they have just announced that they are to launch a cheaper ad-supported service in the UK. This should see the stock price jump a little. In fact, just checking, I think it has. But I can easily see the stock trading sideways and even dropping a little more. With that being said, I don't plan on buying any more shares anytime soon, even at this price. Disney has a wide moat, lots of revenue streams and further potential streams to unlock. Long term, Disney will do fine and the stock price will recover and go well beyond its all-time high. But for the moment, I personally think there are better opportunities to invest in. As usual, thanks for watching. If you've enjoyed the video, please like and subscribe.